So the current Bitcoin price is $19,725. And I'm starting off with this chart over here today, which is the daily chart with a 200 simple moving average on. And I wanted to point something out. The last time that this chart price rejected off of that white simple moving average and was angled to the downside, in the previous bear market, it came down 63%, and currently it's at 63.47% to the absolute bottom. So what does that exactly mean? Does that mean that we've reached the bottom is in, or does that mean that we're close to the bottom? Well, there's a couple of different things that I'm going to go through in today's show. So let's get straight into it. First and foremost, I'm just going to start off with this tweet over here, which is an alarming US recession alert. It says the yield curve inversion between the US 10-year and 2-year rates reaches its biggest point since the year 2000 after an ugly CPI report, and then it plunged 24 basis points. So you're going to see a lot of talk like this. I can kind of see the market is really at that point of maximum psychology where market participants are unsure whether they should flip bullish or go bearish. Yeah, you have Mark Yusko says another problem for equities market is that despite a tough year so far, the equities would still need to fall another 54% from here to reach their fair value. So there is a lot of highly esteemed people over here with strong opinions. And you have here, you'll be surprised how fast inflation can go down when the equity market crashes. So they're showing over here, if you compare to 2008, as soon as that major crash began, the inflation had to change. So are they going to pivot or not? These are things that we're going to cover in today's show. Looking at Bitcoin, first and foremost, on the high time frame over here, looking at our all-important moving averages, we are barely holding on to that 255. The fact that we've already lost the purple 200 MA is not a good sign, and we really want to hit a bottom at least and rebound aggressively before we start to see any of these moving averages turn over. As soon as that starts to happen, the whole picture for crypto as a whole changes, and it becomes, to be honest with you, a very dangerous environment from a charting perspective. It means that things could go down much further. But you can see through the wicks over here that every time we do meet this supply area, there is demand for Bitcoin, and it is being attempted to be brought up. But when I'm looking at this, we really are on the final leg of support, and on the low time frames, I'm going to show you what I'm looking at. Quickly touching on the Heikin-Ashi candles, which is, of course, that Japanese candlestick charting pattern. You can kind of use this. I posted a video about this before, solely on the Heikin-Ashi candles and how you can use that to see when a reversal has truly happened. On the weekly chart, you can see you would obviously be looking for at least one green candle before there's any sort of chance of a reversal. And essentially what these candles are doing is they're looking at the price on average. So you can see the average Bitcoin price, although Bitcoin is 19,705, the Heikin-Ashi candles are reading that it's holding at $20,000. So until you start to see these candles reverse, probably we have not yet reached a bottom, but they do look like they're slowing down in terms of how aggressive they are to the downside. And I think that is at least one good thing that we can see with Bitcoin. Here you also have the Renko chart on the daily, and the Renko has continued as well, red after red after red. You can see it is getting overextended. It's one of the longest legs of consecutive red candles that we have had in the entire history of Bitcoin. But the trend is your friend until the end, so you don't try and fade that. When you look at this, another red candle is very possible. So I'll be watching for the first change in this before I start to look at major long-term pivots in the market. The DXY, you can see the DXY is at its highest level since June of 2002. This is the monthly chart over here. It's actually broken through the resistance. I can't believe it. It's extremely, extremely powerful. I didn't expect that to happen this week. I thought maybe next week. The whole week it's been knocking into that yellow line and wicking back down, knocking in and wicking back down. And that's where we got a little bit of a small relief rally on Bitcoin. But it's not looking good for the risk on assets. Anytime that the DXY continues to rally like this, the risk on assets will have a tough time. And the next overhead resistance areas are coming in at 111, 114. And then the main one is that 6-month key level, which is coming in at 119 for the DXY. So I'll be watching this closely in combination with a couple of other charts. I'm going to post a thread on Twitter after this of exactly what I'm looking at with regards to the DXY and a couple of other indicators that might signal some sort of weakness, at least for these markets, which will filter over into crypto and risk on assets and give us a little bit of relief. So moving on over here, you can see that things are bad. As mentioned, you can see the average consumer is in worse shape than what they were in the 1979 oil crisis, the double dip recession of 1981, the Gulf War recession of 90, the dot-com crash, the Great Recession, and COVID-19. So I understand, guys, that it is tough out there. And that's why you need to really protect the capital that you have, especially whilst the dollar is on such a major run. Protect your capital and deploy when the opportunity is at its maximum or best. And that hasn't come yet. But there are some signs that we could be close. And if you look at what JC Parrott said, he says that huge spikes in realized losses being taken in Bitcoin. This is the third biggest puke of all time. So there are signs that people are capitulating, and typically this is how you want to see markets bottom. You want to see a real capitulation. I don't believe that we've seen it yet, but you'll be looking for things like extremely negative funding rates with high volume, and we haven't got that volume yet. So pay attention to the volume on your chart. Arthur Hayes says that watch the JPY and the euro and expect an intervention to weaken the US dollar if JPY is more than 150 or the euro is below 90. So intervention will mean, of course, that the Fed would have to pivot and print money. And how do we determine if that pivot would be coming? Well, I brought this chart up before. Anytime that it's reached the peak over here of this trend line, typically that is when a pivot happens. But consider, since this is on a monthly chart, it could still go on for quite some time. I mean, if you have to just draw a trend line, for example, I mean, that would be looking like it's going to be in the third quarter. That's coming sometime around October. And you want to see that turn back down whilst the DXY also starts to reverse. Those are the kind of things that I'm currently looking for. Al Capo says, though, over here, and this is what I tend to agree with, which is what I mentioned as well in these previous tweets, is that the downtrend could be weakening. And you can see that in those Heikin-Ashi candlesticks, that they're not as aggressive to the downside as what they were before. So the legs down are getting shorter with less drop percentages. The percentages are not as bad as what they were when we initially started selling off. And then the bounces are also becoming weaker and shorter. And based on this and some other time extensions, the bottom could be very, very close. So stay strong out there, protect your capital, be smart with it, and deploy when the opportunity is greatest. So go have a look at his Twitter. He put it out with the exact angles and everything. And we must be very, very close. Most likely just one leg down is what I'm looking for, the final leg. Here you have 2 Pauper. He says that the fact that BTC held 19K in the face of a 9% CPI print is a sign of strength. And that's, I mean, look, we're on the last support, right? It's not a bullish trigger, as he says, but it's an indication that sellers are close to being exhausted. And you can see that in the market. If you run polls on Twitter, are we going up? Are we going down? The votes are somewhat even. About 70% of people are now starting to be bearish, and 30% are only starting to flip bullish. So what does this mean for you guys? Well, the reason why I'm outlining this is because, of course, in markets and trading, it's all a game of psychology, right? You have to have your mind prepared for the right situation. And I think now's not the time to be looking for 5K, 10K Bitcoin. Yes, it could come, but start preparing your mind to capitalize on the next major dip. So if Bitcoin is indeed in a bear flag and that measured move goes down to 10 to 12K, don't be bearish at those price levels. Get ready to buy, because that most likely will be the final dip. And if not, at the very least, it will still lead to some sort of a relief bounce, so you can manage your risk around that. So he says here that doesn't mean that we can't break down from here or that you should FOMO in. Rather, the balance is slowly grinding from bears to bulls. And that's exactly what I'm saying. There's a slow pivot that is starting to take place. And this would imply a period of declining volatility and a crab action before the breakout. So going on to what Charlie says, he's showing here that the market is now already pricing in an 83% probability of a 100 basis point hike at the FOMC meeting in 2 weeks. So basically tying this in with everything that's been said, expect that the next 2 to 3 weeks could be quite wild and volatile. And if you stay to the end, I'm actually going to outline a strategy that you can use in the face of that volatility and how you can capitalize on it. Because when you have beautiful ranges like this, it's a great and easy way to make some money. So looking at this meme over here, you can see Q2 negative growth in Q1, but no recession risk. We know that now, looking at everything that they're saying on Twitter, it looks like a recession is imminent. So Q3, okay, recession is coming, but you'll not lose your home. So don't sell your home for Bitcoin, because if you look to Q4, okay, you may lose your home, but you won't starve to death. So it's going to be a wild ride out there, guys. And this is the final level of support that I'm currently watching. It's coming in just under 19,000. If we start to close underneath this level, watch how price reacts over there. Let's just quickly grab this. So if price starts to break down underneath that, watch how it reacts underneath this level. You don't want to see it retest that area and reject. So using it as a resistance and reject. If it does, then we probably are going to get that final leg down, which will probably come anywhere between about $10,000 and $16,000 is where the main supply lies. So looking at the MACD over here, this should be closing today. So in about 9 hours time, have a look at how this closes. This could be somewhat of a positive sign if we can at least close as a cross to the upside with the histogram having another green candle. That might give us a small bit of relief, or at the very least keep us within the range, and therefore you can still use that range trading strategy, which I'm going to give you in a few moments time. This chart over here is the Bitcoin on the daily. As I mentioned, if you look at the previous cycles now, I only outlined it from when the moving average started to cross over and how far we drew down from that. So past performance is definitely not an indication of future performance, but nevertheless, it is still interesting. I won't go all the way back, but essentially what I found is that the 2015 market, we had a 73% drop from when it turned over, and you can pull this up for yourself on TradingView. So as soon as the moving average started to tilt or angle down, price pushed into it. The rejection off of that in 2015 was a 73% drop. In 2018, it was 63%. And this one right now is 63.47%. So a lot of similarities. The only difference is the timing. The timing back then, it took a lot longer to get down to those levels that it has now. So is this any sort of sign that maybe there could be some sort of a snapback, at least to retest it? So some sort of a relief rally. Well, what would that look like? That could send Bitcoin up about 80%. And I'm by no means saying that's what's going to happen, but if it was going to happen, I'll identify that on the lower time frame charts. So having a look at this chart over here, this has got the 34 EMA on, which has been fantastic for this entire run. If you had used this, you probably would have got out at about like $62,000 as soon as we started to lose that level and it turned over. Currently looking from the bottom to the top where we almost retested back into it, that was a 27.56% rally. So does that mean that that's the end of it? Was that the relief rally? Well, we'll have to find out. I think we'll get a lot more information probably by next week. We're either going to leave the range then or the week after that, in my opinion. But the fact that we have breached below the support level means that I'm probably going to change this chart up over here. So we had wick. This was the most conservative outlook that we could take from a bullish scenario, meaning that we absolutely needed to hold that. And if you have a look at that, of course, we closed below, and now we're coming back down to test it again. So I don't really think that that is very useful. And I am starting to think that this is more likely going to be a bear flag than it is anything else. So currently, it's looking like that, and there is some range trading opportunities within this chart over here. But I definitely recommend putting on this 34 EMA. Have a look at this. Had you used this chart, as soon as this level was lost, as soon as what you want to do is when you see those EMAs start to turn over, these key EMAs that work on high time frames, as soon as it turned over and retested into that, you could have sold at $60,000. Now, how many of you would have loved to have known this earlier on in the bull market? I'm sure most of you would have. I know that I would have. I only discovered this actually probably around here in this 47K region. So watching that carefully. Oh yes, follow me on Twitter as well. The link is in the description below. Make sure that you follow me there. I do try and post everything on my Twitter, so have a look over there. Let me just click on this. Great. I just want to also show you something over here. Let's go on to that. So the link is below, and I would also like to encourage you to join the Daily Candle newsletter. If you do have a look, there is a link over there in the description below as well. Click on the Daily Candle newsletter. It's where Sheldon and I drop our daily chart setups and what we're watching, of which I'm going to show you some of that in a moment as well. So moving on. This is the main chart that I'm watching now. And for those of you who were following along in the daily candle, of course, we attempted to catch a long on this. We moved the stop loss up to break even, or actually it was a 1% loss. So you would have lost 1%. At the end of the day, this turned out to be a wick. And from a chart pattern perspective, we are still holding higher lows, which means that the trend technically is still attempting to reverse. However, I'm more inclined to think that it's probably going to break down because the momentum oscillators are starting to turn over, and this is most likely going to have turned out to be a major trap. This is also why I encourage you, when you are trading, try and always, instead of buying any sort of FOMO or breakouts, rather wait for the higher low, because I know for a fact that a lot of people were saying that, look, we're breaking out of the top of the range high over here, and they attempted to buy this over here. And had you not been stopped out, you trapped in a terrible position. Over here, we had an easy and clearly defined risk relative to the higher lows over here and higher lows over here. We attempted to buy that with a stop loss just underneath. That failed. I would not be looking at this anymore as a triangle, so an ascending triangle. I would actually delete this out because, in my opinion, that area has already been lost. I think it's more important to now look at this as a range. So we continue to remain in the main range, and until we leave this range, which is most likely going to be to the downside, there is not too much that has changed. So you're looking at your mid-range over here. You need to recapture this, and then you can start to play longs to the upside. If it can hold back above over here, retest as support, you can target back to the upside, and vice versa. As soon as you lose mid-range, retest, which I think is what is happening right now, retest that area as a resistance. Momentum oscillators are turned back down, target back straight down to the downside. Take your profits over here because it could break through and head further down. So that is essentially what I'm watching over here on Bitcoin. Bitcoin stuck below the yellow 21 EMA, the pink 50 EMA, as well as the blue 200 EMA. So all pressure is angled to the downside. Risk remains to the downside. Be careful while you're trading. Sometimes it's better to look for short positions, obviously, when the whole market is trending down. Now, another interesting position that we had was the Uniswap position. So Uniswap actually played out quite nicely. We entered over here from the daily candle newsletter at 550. I would move the stop now into break even at 550. Give it a chance if you want, or consider taking profits, because I don't think so far it doesn't look like it's going to make its next higher high. However, you do have a decent trend. You got your lows, higher highs, higher low, higher high, higher low. Main trend is holding, although it has breached over here. It's got back above and it's holding. You have your golden cross over here where all the EMAs are crossed above each other. Short yellow one is above the pink, above the blue. So that's short, above medium, above long. All of those are angled upwards. And this is essentially how bullish momentum starts to form. But be careful, because if you have a look at the Bitcoin dominance looks like it's going up, which means that altcoins are most likely going to struggle. This is an anomaly, and that's why you want to manage your risk. Raise your stop loss, manage your risk, and be careful in this trade. Ethereum, let's have a look at Ethereum quickly. So Ethereum was in a similar picture to Bitcoin with the ascending triangle. It has lost that over here. That support has been lost. You stuck below all the EMAs. We can delete this, clean this up. So this is probably not happening anymore. It failed to make higher highs, and it's most likely going to lead onto its next lower low and then break down from there. Your breakdown levels on Ethereum, I'm watching between $715 and $792 for those of you who are interested to catch that one. So going on to the range trade strategy, which is very interesting. Okay. Range trade strategy, essentially what I've done over here is I first started off on a daily time frame. Now, we could stay in this range for a while longer. And if we do, you definitely want to capitalize on that. And I have one unique way in which you can do that. So essentially, of course, playing from the bottom of the range to the mid-range or top of the range as long as you possibly can until that breaks down. Looking at the data of everything that we've looked at, if we do reach the ultimate bottom, that could be somewhere around the third quarter, which suggests that maybe there is a possibility that we have the rest of this month and maybe even some of next month to stick within this range. Now, doing that, there's a couple of ways that you can do it. What you can do is find the daily. Again, mark the top of the range. So you're welcome to copy this. It is at 21,671. Mark off the mid-range over there, which is coming in at 20,315, and the low range at 18,927. Then what you want to do is you want to go onto a lower time frame so that you can kind of monitor exactly what's going on. Now, for those of you who've been trading with me for quite some time, you know that I usually will give you general guideline areas of approximately where price will go, right? Because price changes rapidly throughout the day. It's hard to pinpoint the exact level when I'm telling you 24 hours before that in the next 2 to 3 days, price is probably going to lead into this area. I can't give you the exact thing. I can't guarantee that I can go live at that exact moment. So I typically do something like this. Let's just grab that there. I typically do something like this, and I'll say to you, for example, that is your area where you want to be buying, and then vice versa, this is the area that you want to be selling. Okay, so what I found is that I've actually been moving a lot of my funds over onto Bitget, and Bitget have a unique system, which I discovered. You can have a look. If you don't have a Bitget link, there is a link in the description below. It's over here. Let me just show you. There is a link in the description below. They're actually also having a competition, which is going to end on Monday. So best to join now. You get 15% off of your trading fees. And if you take a futures trade, which is what I'm showing you now, 100 of the traders could win 1 BTC, which would be shared. And that ends on the 18th of July. You can get up to $8,000 in sign-up bonus. So check that out. Link in the bio over there. And this is essentially the strategy, right? So they have an automatic strategy where you can use these grid trading. Grid trading essentially would do this. So as I mentioned, I give you a general zone, right? What you can do is you can say, okay, this is the main zone, because you see sometimes you get wicks that come through the support area like that, and it creates a deviation. So you can take the support zone, and in the grid, you can put in, for example, the bottom of that is 18,530, and the top over there is 19,212. And I've always told you guys I like to enter in 3 sort of phases, but with this you can mitigate and spread your risk by actually putting it over about 10 different phases. So let's say you want to buy 18,530 to 19,200. So let's say 18.5 to 19.2. What you do is you come here to manual, and you'll say the lowest price is 18,500, the highest price is 19,200, and then you can put up to 9 grids. So I would go with something like 5 grids over there, and then you can take your investment amount over there and decide how much do you want to contribute. Do you want to contribute 20%, 100%? How much do you want to contribute towards that? And it will automatically set those orders over there. So that is on the spot grid. Then there is also a futures grid, which is going to be more for shorting. So if you are going to be using leverage, then you can do exactly the same thing. And it works the same way. They have an automatic strategy as well, by the way, which is giving you 302% APY every 7 days. That's crazy. So they're obviously using a bot to do that. You're welcome to explore maybe with $100 on that. I haven't done that yet, but I might try that. But same thing over here. You put your low price and your high price, and then this will use leverage. So you need to determine how much leverage would you use on that particular trade, of which I usually say about 3 to 5x leverage. So this is essentially the way that I see the market at the moment, is probably come down to the range. I'll be willing to place some bets over here. I'll have my stop loss underneath the previous wicks, and if price reacts off of that, I'll be selling half of it into the mid-range. So like this, basically buy in this region over here, sell half over here, sell the other half if you get up into that zone over there, and then I'll be short selling from the top back down, close half the position there, close half the position there, and I'm basically just going to milk the range as a scalper for as long as possible. That's in a nutshell everything that I'm looking at, guys. I mean, I'm just watching the market carefully. I think that it's just going to be very, very choppy for the next couple of days. Expect obviously choppy price action over the weekend. You know that the order books are low on the weekend, and that typically the market tends to get manipulated. So that's it. Make sure if you enjoy the short content that you give the video a like, subscribe, hit the bell notification, follow me on Twitter. And that is it from me, folks. I really, really appreciate each and every one of your time. Stay strong out there. I understand that things are very, very tough, but everything will pass, and soon we'll be able to get back into a bull run. But for the time being, I think that this range trading is the best way to make money in this type of market. So that's it from me. I'll see you all on the next video. Cheers for now.